Welcome to Trading to Rise. Today, we're kicking off a masterclass on the psychology of consistent profits. And we're starting with a concept that is honestly one of the hardest things for any trader to truly accept. The idea that no matter what you think, no matter how good your analysis is, the market is always right. Let's dive in. Come on, you know the feeling. We've all been there. You've done your homework, you've looked at the charts, you have this absolutely rock-solid logical reason for why the price has to go up, and then you just watch it tank. It's maddening, isn't it? It makes you question your entire strategy. But what if the problem isn't your analysis? What if the problem is your whole concept of what it means to be right in the first place? Okay, so to really get this, we have to understand what a price even is. That number you see ticking up and down on your screen, it's not random. It is the real-time, living, breathing consensus, the shared belief about an asset's value. And it's created by the combined actions of every single person trading at that exact second. So how does this big, complex market actually get made? Well, it's way, way simpler than you might think. At its core, all it takes is one person who wants to buy, another person who wants to sell, and for them to agree on a price. Boom! That's it. The second that trade happens, a tiny piece of the market is made. Every single candlestick, every chart pattern you see, it's all just the result of millions and millions of these simple agreements happening over and over again. Now here's where it gets a little personal. Your opinion, your research, your really strong belief about what should happen, with all due respect, it's pretty much meaningless. Unless, of course, you're trading with enough capital to literally absorb every single person on the other side of your trade. The market moves in the direction of the greatest force. That's the total sum of all the buying pressure versus all the selling pressure. Your belief? It's just one tiny drop in a massive ocean. So think about it like this. In one corner, you've got everything our ego loves to rely on. Our high-quality information, what we feel is superior reasoning, maybe some fancy academic credentials, or a high IQ. But in the other corner, you have market reality. And what is that reality? It's just one thing. The direction of the greatest force. Your credentials don't move prices. Your IQ doesn't move prices. Collective action, money changing hands, is the only thing that does. And this just hits the nail on the head. This quote says it all. If the market doesn't share your belief, it doesn't really matter how right you are. You can have the most brilliant, well-reasoned argument in the world, but if the collective market doesn't agree with you by putting its money where its mouth is, your reasoning is worthless. So all of this is building up to a really radical conclusion, and it's one you have to let sink in. In the market, the very concepts of right and wrong just don't exist. The market isn't a judge, it's not grading your homework. It's a completely neutral environment that does nothing more than reflect the dominant force at any given time. And here it is, the absolute central truth you have to internalize. The market is never wrong in what it does. It just is. Think of it like gravity. You can't argue with gravity. You can't call it wrong for pulling an apple to the ground. It's just a fundamental force of nature. It just is. The price is what it is because that is the reality the collective created. This forces us to face some pretty uncomfortable truths. First, the market is the ultimate decider of price, full stop. Second, because it's just a force, it can't be wrong. It can only be. And that leads to the toughest realization of all. In this entire equation, the only one who can actually be wrong is you. You can be wrong by betting against the force, but the force itself is never wrong. So what this all comes down to is a powerful choice that every single one of us has to make as a trader. On any given trade, what is more important to you? Is it being right or is it making money? Because they are often two very different things. Choosing to be right means clinging to your ego, defending your beliefs, and fighting the market. But choosing to make money? That means practicing objectivity, aligning with the market, and just following the force. So I'll leave you with this question. The next time you're getting ready to place a trade, I want you to stop and really ask yourself, what's driving this decision? Is it my ego and my need to prove that my analysis was correct? Or is it an objective, humble acceptance of what the market itself is actually telling me? The answer to that question could change everything for you. Apply this lesson to your very next trading session. And make sure you subscribe to the Trading to Rise channel, because in the next episode of this series, we're going to build on this foundation. See you then.